Let's get started. So we are here. This is the second in our installment of our 3LT Playbook, the new 3LT Playbook webinar series. I'm going to share my screen for a second here, just so you guys can see what I'm talking about. We released this thing that we call the 3 Laws of Trading Playbook. You can go check it out at 3ltplaybook.com. And it's all basically to answer the question of, what do I have to do to make it in trading, right? We came together as a team and really, and most of this was driven by Lucci's perspective and answered that question for you in this playbook. It's an online experience you can go through for free. We highly suggest checking it out. And what this webinar series is all about is diving deeper into a lot of the principles that we talk about in these in the playbook. And today we're talking about number 2, master your environment. So that's what we're going to be talking about with Rajs here in just a second. Right after I give a shameless plug for the Saying Lucci Master Course, which Rajs happens to be a teacher of, alongside Lucci and Wall Street Jesus. So the next master course starts up April 27th, guys. This is our flagship educational experience. It teaches you everything that you need to know to make it as a full-time trader or as a part-time trader, which a lot of Rajs students, are now doing using his Trading the Post methodology. We teach you equities and options, tape reading, flow trading, trading psychology, how the markets work, the type of people that or market participants you're interacting with, market makers, algorithms, stuff like that, how to anticipate their behavior, trade around it. It has 12 live classes, 3 nights per week, 4 live tape reading sessions. You get lifetime access to all future live sessions, as well as all the past sessions in recorded format. We have a lot of people who have time on their hands right now, for better or for worse. And they've been saying, hey, you guys can start the live class up earlier to accommodate that. No, the next live class starts up April 27th, but that does not mean that you need to wait until then. If you want to start up to join, you get access to all sorts of recorded materials, including all of the previous sessions. So the session that we taught starting in December, you guys can start learning that right away if you sign up. So if you're sitting around, you have time on your hands, you want to get into this, there's no reason to wait to sign up. We have 2 types of discounts for people that are out there. One is for Steam Room members. If you're a Steam Room member and you want to join, you can just shoot me an email, charlie@sayinglucci.com. I'll give you the discount. And the second is for anybody who has been affected by the coronavirus. And we've all been affected. So we really trust you guys to not take advantage of it. We're talking about, intense, acute financial distress, lost a job, something really serious happened as a result of coronavirus. We want to accommodate that as much as possible and help you out if we can. So we have an extra discount for that. So just shoot me an email, charlie@sayinglucci.com, if that's the case. If not, you can sign up right down at the bottom of the page, and you can do one-time payment or a payment plan for 4 months, no extra cost. So that's the end of the spiel. But this is a great course, a great experience, and we put a ton of work into it. It's not just Lucci anymore. It's Ronchero, it's Chris Cady, who's an expert in trading psychology. It's Wall Street Jesus. It's truly a comprehensive package. So we hope to see some of you guys join us in there. And enough of that. Let's talk about the subject for today, which is called Mastering Your Environment. Before we get too deep into that, Rajs, why don't you give, you don't need to give like the full bio because we've made you do that a million times, but just maybe give a quick description of how you trade, the Trading the Post strategy, how you approach the markets typically.
Yeah, sure. So, ultimately what our room tries to focus on, and it's obviously been difficult in this environment, but we'll get those opportunities soon enough, and we have one going right now. But ultimately what happens when markets pull back like this is they tend to recover. So our focus is we're looking for the ability to be able to have a long-term view of quality that's really been beaten up, and there's plenty of that right now. And then we take a long position in that. And then as the days go by, what we're looking for is as those options increase in value, we look to roll them up, and we look to write against them on, whether it's a daily or weekly basis, whatever opportunity we're afforded to go ahead and collect premium and get those leaps paid for as quickly as possible. And then what we're able to do with that money that's left over is a couple of different things. When the market's at its all-time highs and VIX is at its lowest points, we're looking to add crash protection to our portfolio. So any longs that we have, number one, are paid for. Number two, if the market corrects like it just did, we get paid on that long-term put protection. And then in the mid or the short term, we're also looking for at a lot of the companies that we either want to find a spot to get long on, like let's say in NVIDIA or a Microsoft, and we're learning how those stocks are trading in the environment that we have. So we're also playing some short-term scalps on those types of opportunities. So we're looking really at long-term appreciation, short-term ability to play up and down. So, the idea of the room is to really, build a long portfolio and be able to protect it in case of market correction, like we just went through.
Gotcha. And you had been trading for a solid, 15 years before you found Lucci and Jesus in the room?
Yeah, I had been an active/passive participant, kind of like most people who get involved in the market and investing and then find out about options and try to do that on the side while you're working a job. And I had great success. That goes back to the 90s. And then, I made some really stupid decisions. I had some great gains and then, blew up accounts and went through some intense personal stuff that kind of forced me into a situation where I needed to come up with a method and a way to really be able to take advantage of a long-term portfolio, but also protect it in case of, zombie apocalypse like we're having to deal with right now, right? So that kind of spurred out of that. About 10 years ago, I met a former market maker on the Philly exchange. He was the market maker for Apple and Dell at the time, which was probably the biggest, the biggest book down there. And then I can't remember how, I think it was maybe 3 or 4 years ago now, where I bumped into Lucci online and I came into the room and I just observed what was going on in the room. And like a lot of guys, I was like, oh, this is great. Like the unusual option activity, the sweeps are a crystal ball. I had some success with that. I had some not so much success with that. And I kept hearing about Lucci talking about tape and how, there was this course. So I finally capitulated and went into the course and then, learned from Lucci how to read tape. And, that just added the gas to the fire that I needed to really make what I was doing work really well. So, that's the long and short of it.
And you're a great example of someone, your temperament, your risk tolerance is different than Lucci's. And so you've taken, very similar skill sets and understanding of how the market works, how options work, but you've applied it very differently. You've customized and applied it very differently with obviously tremendous success. And that's one of the things that we really emphasize in all of our education, all the content that we put out there. There is no one-stop, single method that you guys can use to just go copy what someone else is doing and apply it to yourself. It really is about customizing what you've learned and to your own needs, your own personality, your own account size, risk temperament, and applying it in through that lens. So a very good example of this is how Rajs has, as we've coined it, mastered his environment, right? When we talk about environment in this context, we're talking about everything that you have to interact with in order to engage with the markets, in order to trade, right? That means your technology, your hardware, your software, the sources of information that you rely on, tape, options flow, news, chat rooms, stuff like that, newsletters, data, even down to your physical environment, which is where I want to start with, because I think Raj is one of the best examples of somebody who just listens to himself and his own needs and what works for him, and then adjusts his approach to accommodate that, rather than trying to emulate what may have been put on a pedestal by people out there as like, this is the way to do things. So Raj, can you describe how you trade right now with 3 different laptops and why that works for you?
Yeah. So again, that kind of came out of it came out of chaos, right? Because there were, there were times it's like everybody else has to try and wheel around a laptop and find places to plug in and get onto Wi-Fi, or you're relying upon your phone. So, I've had instances where I'm out of range, right? Or I've got a position on, and my system goes down. So out of that type of chaos, I just came up with a system that works for me. And I have 3 separate laptops. Well, actually, I have 2 laptops and 1 iMac. And for me, the iMac is great. It's a nice big 27-inch monitor. I like to keep things simple. I don't have a massive 6-8 screen panel display up in my office. I like it a little bit more clean and streamlined. Otherwise, it gets too cluttered for me. So I use the iMac for, I keep my TOS up on iMac on my my MacBook. I use it primarily just to communicate with the guys in the room. And then I also have an Asus PC that was built specifically by a company called Easy Trading Computers, and they just put together a nice laptop for me that the only thing that gets run on it is my trading platform. So I keep them all separate. Plus I have my phone, because inevitably what happens is one thing freezes up or goes down, and if I have to restart a machine and I lose my ability to close out a position or see what's going on, I need something else to be up and running. So I've got the 3 machines plus a phone, and that's kind of what I need. And if they all crap out, the phone allows me to shut positions down, but otherwise that 3 screen separate operating system works really well for me.
Right. And you are also you don't use different brokers for each strategy, right? But you use different accounts. You keep all of that separate per strategy?
So for trading the post, I only use 1 account for that activity, and then when I'm scalping, I'll use a separate account. Now, it doesn't mean that I won't scalp what we have in the trading the post room in that trading the post account. But when I walk outside of that, I'm going to scalp, like NVIDIA or Amazon or whatever it is. I won't do it in my trading the post account. I'll only do it in my scalp account. So I do have 2 separate accounts for that activity.
And that's something you've been doing for a long time, or is this a newer development for you, or how did you come to learning that helped you?
So I've always wanted to get better at scalping, and that was maybe, let's say, 2.5 or 3 years ago. And I still am. I'm better at just buying something and writing against it. But I really took a lot of time to focus in, because there's so much opportunity every single day where you can just wait and pick a spot and put on a position and wait for that position to work for you. So I wanted to get better at, can I find spots? Can I find triggers? Am I putting on the right trades? Am I recognizing patterns the right way? And, that has to be separate from trading the post, because if I don't separate them, it starts to, it changes my mindset. My mindset has to be completely different in one account versus the other. It keeps my long-term mindset healthy and on track. And then if I'm scalping, I can go over and I can work on working the scalping side.
Got you. Okay. And so I think that's a great example of, and just one sort of example of what we're talking about here with this concept of mastering your environment. And it's about adjusting everything, every way that you plug into the market to make things as easy as possible on yourself. Right, Ron? I mean, yep. And I think generally, would you agree with there's a Paul Tudor Jones quote out there where he talks about, if I have a position that's making me uncomfortable, I just get out of it, right? Because I have that latitude as a trader. That's what I can do. I can always get back in. I mean, yep. Are you always looking for comfort, would you say, in terms of how you arrange everything? Or, what's your sort of barometer for whether something's working for you or not?
So when it comes to a scalp, we talk a lot about, hey, if we're looking for levels, and then we're looking for change in tape at levels, and we'll put on a small position to see if we've found a trigger point. Because if you find a trigger point, you start to get paid quickly. And when you're scalping, I don't want to sit in a position. I want to get paid, right? So
Right.
does it make it so I'm uncomfortable with the position? I mean, yeah, all the time. And what we really try and work hard on is, if we are going to test, we're only doing 1 or 2 contracts, and then if we find our spot, we can get bigger at that point in time. So to say, am I uncomfortable? Yeah, I mean, constantly when I'm scalping, I'm looking for the right spot. So it's constantly uncomfortable until it's not, until you're in the trade that's moving your direction, right? You can, that's the hard part. You can't time everything perfectly, but when you find the spot where you're going to get the movement, that's where we try to line up. So we try to limit the amount of in and out that we're doing, because that stuff can eat at your P&L, especially if you're trying to trade 25 lot, 50 lot, like something like that. If you make a mistake by 25 cents or 50 cents, and now all of a sudden you've got a P&L that, what I mean? It's going to change your mindset and put you into a spot where you don't want to be, because now instead of just being, you want to avoid that drawdown, because mentally it starts to weigh on you. You're like, well, shit, I'm down $3,000.
Right.
And now I've just got to get back to where I was, just to get back to even. So, it is a constant battle back and forth.
Yeah. Right. And you lose that. You're saying preserving that emotional capital is essential for you.
It is.
That mental and emotional capital. And I think that's one of the things that we talk about with, with your environment, with, your setup. It's like, there's a lot of people out there who are fighting their environment in a lot of ways, and they're wasting mental energy in the process of doing that. Whether it's their platform and just having things feel like a shit show, and they haven't really set aside the time to be like, how do I actually want my screens to be laid out so that I can preserve my mental capital for more important decisions. The thing that the traders run into every single day, all day, if you're trading 8 hours, is decision fatigue, right? I mean, this is just part of the human brain, of human nature. Decision fatigue is a well-researched, understood phenomenon where the brain can only make so many decisions before it starts to lose cognitive capacity, right? You start to lose your ability to discern what the right decision to make versus the wrong decision to make, and traders fall victim to this. So there's a famous story about Obama, how presidents of course run into decision fatigue too, making large decisions at all times. He had someone else pick out what he wore every single day, right? Because he was like, every single decision that I can take off my plate, I should be doing that, right? Because I've much, that's energy that I can allocate towards, making more important decisions. And traders, you guys should be in the same mentality here. So that's part of what we're talking about with mastering your environment. Raj, I want to talk about sources of information that you have, because I think this is a place where there's a ton of noise that is created for people out there, whether it's Twitter or just looking at, like, just sifting through thousands of charts every day without really being able to pull the right information from them. What are the key sources of data or information? What are the key inputs into your system that you use to make decisions from?
Yeah, I mean, when I come in the morning, I like to do, first of all, I like to do my own work. I don't like to have on, I typically don't go into the room until just before we're about to start trading, because I don't want extra noise. I don't have CNBC on. Typically I'll just have like some easy listening, music going. Like, it depends upon what kind of mood I'm in, right? Like, do I want to be in a mood like, Band of Horses, or do I want to be in a mood like freaking Pantera? I don't know, right? Like, it just depends on what kind of mood I'm in at that moment in time. I've made some changes within the last 6 months that have helped me just get a little bit more focused in the morning. Like, I don't drink coffee anymore. I drink green tea. And that sucks because I miss coffee. I really want coffee, but it makes me too much of a hyped up mess before I go into the market. So I can't drink coffee anymore before I get rolling. I've got like the lights in the office are kind of on a dim setting to kind of keep me calm. I'll come in, I'll pull up what I'm interested in looking at. Like, let's say, for example, we're interested in looking at finding a way to get ourselves into like NVIDIA or Microsoft in a long-term way. So I'll go and I'll do the work on the charts on the ES. Where were we at? Where are we now? Where do we think we could go? Where are the stocks that we're currently in, and what's the outlook for them based on what the overall market tone is going to be for that particular day? Do we have those opportunities? And then I'll go out and I'll use like Thinkorswim is big for me. I always get onto Econo Day and I pull up the calendar because I need to know. I don't want to trade in front of market moving events. Like this morning, I did not want to be in front of that number that came out. Yesterday, I did not want to be in front of the Fed minutes. Those are important things to me. So I look for that and I make sure that I'm aware what time are those things going to happen so that I don't get caught unaware. So I use that. If there's something that I'm looking at, a little bit more long-term and I want to get some more fundamental information, I use as many free sources as I can because, the information is kind of already out there. So FinViz is really good. CML Viz is really good. I will just go on and look for, are there any headlines that I didn't see that could potentially cause me an issue throughout some point of the day, right? Like, is Trump going to get on TV and talk sometime today? I'm trying to uncover as much of that as I can before we get going. And then as at like a few minutes before the bell, I'm typically in the room and I'm talking to the guys about, hey, here's the levels that I see based on the work that I did. What do you guys got? They come back at me with what they have. And then we're kind of ready to get the trading day rolling. We typically get some good opportunities right off of the open. And then, we've learned, just kind of how to chill and be patient and talk through what it is that we're looking for and then look for those opportunities. So that's kind of the way that I prep and get ready for the morning, and having it nice and quiet just like sets the tone for me.
Right. What about during the day? You're looking at news as it comes out live? You're looking at tape course? You're looking at flow? Like what about what are the inputs?
So we're definitely using. I definitely look at from a high level. I'm looking at the squeezometer, right? Like today we're looking at it, and I'm thinking, gosh, after this big run that we've had, squeezometer. I don't remember what it got up to. I think it was over 65. So to me, that just says, hey, I'm looking and leaning more towards a bearish type of stance. Am I going to get it? I don't know if I'm going to get it, but we were looking for spots where it could definitely show up. And, we had a few of those today. A lot of times what happens when particular flow comes in or sweeps come in, we scrutinize those sweeps, especially if they're on names that we are interested in, because not every single sweep, as everybody knows, means that it's going to be an instant, that's a winner, or that's something that we need to jump onto and follow. We look for different things. So we use the flow, we use the unusual option activity that's coming in. As far as like sentiment is concerned, you can get a good read when you're in the steam room of how people are feeling. Are they excited? Are they nervous? How are they trading? What are they trading? Lucci's a good barometer too, because when Lucci's fired up, he's, you can see if he's onto something or, if he isn't, right? Like today on the Amazon, when he was fired up about it, I was like, if it breaks here, yeah, I'm on this thing. If it doesn't, I'm not chasing this thing. And then, we got a little bit of a pullback. People were excited about it. it popped back up, and on the second pop back up, it didn't continue. So I was like, that's it, I'm done with this thing. And, you know, that's helpful for me to see and hear how other people are reacting to it based on what I see, you know, in the tape as well as on the chart, and, you know, tying it together with all of those things that I see. So that's how I draw a bigger picture to boil it down to a moment in time.
And are you reading tape on a moment-to-moment basis at this point, or just only when you're timing your entries and your exits, or
Yeah,
how often do
so
you look at a tape?
so I'm one of those guys that combines using a chart for looking for change in tape at certain levels. So for example, if I see some type of a pattern on a chart, I will look at tape at whatever price point I'm looking for. Like today on NVIDIA, I was looking for it to crack, and I was looking for it to crack around the, let's see, what level were we at? Hang on one second. Let me just pull this up real quick. I was looking for the NVIDIA at around 267.50 because it had been playing with that area. And, you know, if you look left on a 5-minute chart over time, it bumps its head there often, at least in the last few days, right? So, you know, what am I looking for at that point? Well, I'm looking at that point, I'm going over to look at the tape and say, okay, am I noticing anything different about the tape? Is there any change in the mood of the ES? Is there any change in the mood of guys in the room? Is there anything that sometimes Jesus will post, hey, flows died here, right? Those are indicators and clues to me that I might be on to something. So that's how I'll tie those steps together.
And for you, like your journey to determine, to select the source of information, the data, the things you were going to pay attention to, it had to have missteps along the way, right? I mean, were there times where you were just on Twitter and the noise, and you were getting caught up in the noise? You were looking at following the wrong traders? Were you looking at Fibonacci sequences, and that's not something that you realize it's not for you? Like what were some of the missteps that you had?
I mean, great question. You know, I think probably the one of the biggest things that I learned over time was, you know, a lot of people will use charts, but the importance to me of going from a big picture, meaning looking at like a weekly chart to a daily chart to a 4-hour chart to an hourly chart, and continuing to work it from the big picture down to the smaller picture is of super importance to me, because over time, as you continue to look left on a chart, you can see areas where a stock either supports or resists. So that having that big picture focus in mind while trying to play something shorter term is very helpful. But to be able to apply it in practice can be difficult for a lot of people, right? It takes a lot of practice to get there. And then if you're able to combine it with all of those other elements that we have at our disposal in here, that's where you start to cut down on the number of trades that you have to take, and you start to improve your performance of your trades. I don't need to be in and out of something 100 times in a day. But what I like to do is I like to find the spots that will work for me. So, you know, over time, it was like, was I identifying certain things correctly? I had to go and I had to learn all of these other things that people talk about so that I could decide whether I could eliminate them or not, like Ichimoku cloud, right? Or flatline support and resistance, Fibonacci retracements, Fibonacci extensions, you know, like, and then, you know, more detailed types of patterns that other traders rely on and use, and some that you can see get tied to algos for triggers. Like if you recognize and understand what a Gartley pattern is, it might not be useful to use it, but knowing where something could trigger based on some type of a technical pattern is very useful to be able to come back and say, hey, I recognize this is a spot where something could change. So going through all of that and learning it is time consuming, and it takes a lot of effort. So I kind of had to, you know, it's like you learn something, then you've got to tear it all down and learn it again. So it's a constant battle to try and find these areas that are going to work. And if you don't understand a big basket of things, it's hard to understand a small it's a small spot on the map, if that makes sense.
Yeah, absolutely. I mean, I think what you essentially just said is you were referencing what we talked about in the last webinar in this series, which is law number one: master your domain, right? Learn these skill
Yes.
sets, learn tape reading, learn options, like learn the, the skill sets that you're going to have in order to have success and to even have a fighting shot in the markets. And then once you've done that, and once you've kicked the tires on as many of those as possible, and you've identified the ones that work for you, then you can start saying, all right, these are the sources of information that I'm going to pay attention to because they serve that methodology, right? I mean, in terms of calibrating your relationship to the types of information that you have coming in, was it hard for you to say like, okay, this is when I'm going to start, this is when I'm going to be looking at the tape, this is when I'm going to listen to someone like Lucci, and this is when I'm going to, listen to the voice in my own head? Like, what was that experience like for you?
The experience is that you try a little bit of everything. It's all trial and error until you find those pinpoints that work. So, I've worked with a lot of talented traders in our room and outside of our room, and everybody has a little bit different something to be able to, to add. So it's your job to take that information and try and boil it down, because if it works for me but it doesn't work for you, then it's pretty difficult to boil that, you know what I mean, to make that stuff work for you.
Right. Okay, that makes sense. We're getting a lot of questions from you guys in here, so keep dropping them into the Q&A portion of the chat, and we will we'll answer those for you. One thing that you hit on, Ron, you're talking about, listening to Lucci, listening to Jesus, some of the other traders in the room, using what other traders are talking about as a little bit of a sounding board, right? And
Yep.
to kind of help triangulate where you stand on things. It's really important for us to emphasize that you have to be selective about the people that you're listening to, right? I mean,
for sure.
Did you ever fall into, and maybe earlier in your career, just like trying to piggyback on other people's trade, on some public figures trades or something like that, or having somebody else do the work for you? Yeah.
I mean, Lucci's a perfect example, right? Because he's such a prolific trader, and when he gets excited about something, it doesn't guarantee that he's going to be right. And what happens with Lucci is, like, he can get into something and be wrong, and he can be down 50 grand and it doesn't bother him, and then 20 minutes later he's up 120. Most people can't trade that way. Do you know what I mean? That's not a typical individual. So you've got to know, like, when you're working with Lucci, like, okay, hey, what's he doing? How's he positioning himself? I like it when he does X, Y, and Z. I don't like it when he does this. Or like if you're listening to Jesus, right? Like, he trades a certain way. And it took a long time for me to figure out how both of those guys trade, and just jumping in and trying to trade like them is a disaster, right? Because you can really, if you don't understand what they're doing and you think they're leaning one way but they're not, you can really get hurt in those types of situations. And it's the same thing when you're trading with other traders. Sometimes you get into a sync and a rhythm with some guys and you're on the same page, and sometimes it doesn't. So you have to be willing to go through that exercise and figure it out and not repeat the same mistakes over and over again. That's really what it comes back to is, can you stay calm, and can you fight can you fight yourself and get to a point to where you're not fighting yourself, to where you're easing what you're doing by, calming yourself down and realizing when, hey, I'm emotional because of this, or I see this guy doing this and I don't want to follow it because of this, or I see this guy doing this and he's right on the same page with me, and that's helping me out a little bit here.
Right. So it's a lot of what you're talking about is just not giving the reins over of your decision making to somebody else, right? I mean, you can use them as a source of information, but you're not just blindly following them, especially just to try and kind of pull out one of the conclusions of what you just said. If you're going to use someone as a source of information, as an input into your system, it's really important to understand them as much as possible, like how they trade, what kind of account size they're doing, what kind of opportunities they look at, like what their systems of analysis are, because and I think that's one of the reasons why Twitter is so dangerous, right? Or some other services out there, because you don't know anything about who these
Yeah.
people. You don't know, and yeah.
I stay off of Twitter during the trading day. It is not something that I look at. Like I said, I don't want other voices in my head as much as possible. And there are lots of times where throughout the course of the day, I'm looking for something specific, and I can't have Jesus on in the background. I can have the feed going, and I can watch the option activity coming through. But if Jesus is on some type of a trade where he's doing well and he's in a good mood, like, that can be very different from what I'm looking for. So I have to block that out so I can focus on where my head's at and what I'm seeing.
So you got to determine the time and the place for when, certain types of your environment should be in play, and
exactly. And the social media for me is more just entertainment than it is anything else. There's in my opinion, there's very few guys out there that are giving you any kind of information that is actionable. And a lot of it is, it's already happened. A lot of it is a lot of people who don't know what they're doing. Like, who was the guy that I sent you the other day? That guy that, what's his name?
Portney, the guy who started
Barstool Sports.
I'm sure you guys in the chat, let us know if you've seen this guy.
It's solid gold to me. I mean, for me, that's entertainment. I love watching this guy have a meltdown because he has absolutely no idea what he's doing. None. It's awesome to watch him he doesn't care. The guy's down like what, $4.5 million, and he's like, whatever, I'm just going to keep throwing sausage at it. I'm like, dude, this is comedy. Like, keep at it.
Yeah, I don't know what his end game is. I don't know if they're like about to launch, Barstool Trading or something, and this is all just a big marketing thing for him.
Because we know who we're going to write against every week.
Yeah, or if he's like legitimately trying to do this on his own. I mean, he's got the money; he can do whatever he wants. He's worth like $100 million. But it is interesting. It's hilarious on one end, and then on the other end, it's like, what actually is happening right now? Are you actually taking these trades? Like, what's going on here? Okay, I think this is a really good place to start taking some Q&A.
Sure.
So let's jump in here. John T is asking, how do you determine levels to start paying attention to in the tape?
Oh, in the tape. So that's for me, it's looking at a chart. I'm always looking left on a chart. So I'm always looking at big picture down to the small picture. So I change my time frames. I'll start with a big picture reference. So whether that's a weekly or a monthly chart, and then boil it down to a daily, to a 4-hour, 1 hour, half an hour, 15-minute. And then based on the levels that I identify at those points in times, like I'll set an alert, and then I'll go back and I'll look at tape once an alert pops up on my phone, or once it pops up on my screen. I'm like, oh, okay, NVIDIA's at, whatever on the half. I'm going to go observe tape, and I'm going to see if tape starts to change. And whether that means that, hey, because in tape, you can see when people pull a bid, you can see when, supply dries up, you can see when demand increases. I'm looking there. I don't want to sit there and be glued to watching one set of tape all day, waiting for that moment. I know that at certain levels that I'm likely to see changes in tape. And the way that I do that is by using the chart and looking for those areas of support and resistance. If it shows up, great, I've got something. If it doesn't, okay, then on to the next. And not any more detail than that. It does it because if you make it too complicated, you just sit there and grind yourself into oblivion, with the what if scenarios.
Right. Which is not where we want to be. John, you also asked a question, can you explain how you trade? Not a lot of people know how you trade. We can't really go too in depth into that in the context of this webinar, but if you go to our YouTube channel, I just dropped a link into the chat for this, but there's a video called Trading Coronavirus Markets with Lucci and Ron Friedman. We did this, was that last week? last
Yeah.
week, 2 weeks ago, maybe.
Okay. Yeah.
And Ron goes deep into his strategy there with Lucci and how they do it. So, that's a really good video for anyone to check out if they want to learn more about how Ranch does what he does. Let's see. When you write against your options, you're buying both puts and calls to write both sides.
So like a condor, if I'm selling both sides, the thing is that in my service in my room, what we teach is we teach a variety of strategies, but more importantly, what we do is we look for the type of market that we have and what strategy can be applied for what the market is telling us. Because if we just say, hey, we're only writing condors, well, you need the market to be able to write condors, because if you don't have it, you'll get chewed up. So it's not just, what do we take, do we just come in with one set standard of strategy? We don't do that. We look for what is the opportunity that's giving us right now. And if it's against our long position, typically we'll go through a conservative scenario. We'll go through a more aggressive scenario. So in a conservative scenario, it might be, hey, you're holding a 10 lot or, a 25 lot of whatever, and it's reached a point of resistance. And do we want to write a full position against our leaps? Or, do we want to do something a little bit more aggressive? Do we want to look for, hey, it's about to break out here, we want to play some short-term calls? Or, hey, it's about to break down here, do we want to play some short-term puts? So it's not just one size fits all. There's a lot of scenarios that present themselves, but if you've got the right Swiss Army knife, you can play pretty much any scenario that presents itself. You just have to identify the scenario so you can use the right tool off of the knife.
Well said. What advice would you give to a younger trader, 23 years old?
The good news is that you've got time, right? And if you are, I see a lot of younger guys that are trying to learn how to trade. And the nice thing about that is, when you're younger, you've got a lot more testosterone coursing through your system, right? Like the younger guys are not afraid to take on ballsier trades, right? So that's an advantage. And if you've got a source of income that helps you with that, because you will make mistakes, you'll get chewed up, but learning how not to come in and just throw Hail Marys all the time is probably one of the biggest things that I can say for younger guys. And find somebody who's a mentor that you can trust, whether that's somebody like me, or whether it's Lucci or somebody outside of this service. Find a mentor who you can learn from over the course of time that you're open to. And it's different for younger guys when they come in, because like I've got college age kids, and like they can't come in here and learn from me. It's just like when I tried to teach them how to ski when they were little, right? They're like, shut up, Dad, you're stupid. I know how to do this. Like find somebody who you jive with. And that's a big asset, I think, especially for younger traders. Like Spencer's a great example, right? Spencer's what, 24, 25?
I think it's 24. Yeah. Maybe even knowing that, but I think 24.
I mean, he found Lucci, right? He picked up his stuff and he moved down to Puerto Rico, and he like immersed himself in this, and he's like turning into a solid trader, right?
Listen to that, Spencer. I know you listen to that out there. Ron just said you're turning into a solid trader. You have arrived. No, Spencer's a great example. Like, one of the things that you guys have going for you being younger is you have the time to take those hits and put in the reps. I think the thing that we see younger traders falling into is they're really tough on themselves. They expect to get things really, really quickly. They expect things to happen fast. And what you see the older traders giving them advice for is just like, yo, just chill. It's going to take some time. You're going to have to do a lot of trial and error, as Ron said earlier. It's going to take you time to figure this stuff out. So, be patient and just allow the process to unfold at the pace that it will, because this is not simple stuff. You don't go just learn how to trade successfully in a month. It takes time to do this. So I think we got time. Let's do one more. I will do a plug for the next the next law in our playbook series. There's 3 laws. The next one is Master Yourself. That's all about trading psychology. That's dense enough that we're going to dedicate 2 webinars in this series to it. The next one is with Chris Cady next Thursday, a week from today. It is going to be a fantastic interview. If you guys haven't seen Chris talk before, go to our YouTube channel, search Chris Cady. He's a very, very smart guy, very evolved, and just an incredible all-around human being and trader. So we'll be doing that, and then the week after that, we'll be doing with Lucci. If you guys already signed up with the Zoom, you're already signed up, so you're good to go. And then, of course, Master Course starts April 27th. If you have time right now to jump in, you can do that now. There's no reason to wait. All the recorded material is there waiting for you. Shoot me an email, charlie@sanglucci.com if you're a Steam Room member, or if you've been particularly affected by coronavirus, we're offering some discounts for that. All right, let's do one more question. Let's see. Thank you for the video. Thoughts on selling covered calls, planning to build large equity positions instead of buying leaps on fundamentally strong, beaten down stocks to hold for long term.
So my personal belief in the way that I've been trained is that, and mathematically, it's, you can prove it. Why would I buy, let's say, 10,000 shares of Microsoft at, let's just say it's $150, right? Why do I want to put that much capital at risk, right? If I'm buying 10,000 shares at 150, I mean, that's $1.5 million, right? So if I want to control that much, if I'm looking to do that on a long-term basis, why wouldn't I buy leaps? Number one, I've decreased my capital outlay. I don't have as much capital at risk if I've used the correct delta on the option that I'm buying. I know that, Delta does a couple of things for me. Delta shows me how much I'm going to make in that option for each point that stock moves up. And, Delta has an inverse relationship, and it works like a brake, because if that stock comes in, Delta decreases. So for example, if it's 80, I know for each buck that Microsoft goes up, my option goes up 80 cents. Well, if it starts to come in and my Delta decreases, the speed, the acceleration at which my option starts to decrease is related to Delta. So if I now am at a 70 Delta, well, I'm only going down 70 cents for every dollar that you're going down in your equity. So why in the hell would I put that much capital at risk and not be able to have the acceleration and the deceleration of the Greeks on the options work to my advantage? So I don't even consider covered calls as a viable strategy. To me, it carries way more risk than what we do. So that's my thought on covered call writing. Does it work for some people? Yes, it does. Does it work for me and my risk tolerance? No, I think it's foolish.
There you go. There's your answer, guys. Thank you for being here. We hope you guys are safe and taking care of yourselves. Please join us next weekend or next week for the next installment in the series with Chris. And this weekend, keep an eye on our Twitter, on Investors Live Twitter. They're doing the COVID-19 relief virtual stock trading summit all day Saturday. Lucci's in there. Nate from Investors Live is in there. Mike Bellafiore from SMB, guys like Tom Canny, who you've seen on Twitter, who doesn't have a service. There's a ton of really good traders that are going to be in there on Saturday. It's all free. If you want to donate towards COVID relief, you can, but otherwise, it's just a great opportunity to learn from some of these guys. So if you're quarantined on Saturday, go learn something from them. So hope you guys enjoyed. Any questions or anything, shoot me an email, charlie@sanglucci.com. Ranch, thanks as always for being here. You're a beast, man. Appreciate it.
All good. Have a great weekend, man. Happy Easter.
Likewise.
All right.
See you guys.
See ya. Peace.